Liquidity for Americans are at an all-time low, regardless of what individuals are making out there in the marketplace. People have bills, they have mortgages, they have car payments. How do people re-up on liquidity? By refinancing their primary home that they live in. That's how 99% of Americans re-up on liquidity. And no one's been able to refinance in 36 months. I think liquidity is an all-time low. I think credit card debt is at an all-time high. This has been like the most low-key, under-the-table, quote-unquote recession that has ever existed. It's not really like marketed on the news. And I think a lot of that is because the stock market over the last 3 years has done relatively good, with maybe the exception of the last month or so. Other than that, stock market's done great. Real estate prices have held strong regardless of the rate environment. Because of that, people are like, oh, we're not in a recession. Now, unemployment's starting to tick up, and we're starting to see some people get squeezed, and we're starting to see some deals shake loose. I think a lot of the sellers in the marketplace that maybe 2 years ago, 3 years ago, when the rate environment started going up, were like, hey, I don't need to sell right now. I think some of those individuals, okay, they're realizing the rates aren't going to go down anytime soon. And so maybe some of those individuals are finally ready to sell. But I believe, and I'm speculating, I'm always willing to be wrong, I believe 2026 will be a recovery year. We'll continue to see some rate cuts next year and into 27. I think 2028, we will look back as real estate investors at 2025 and be like, man, I should have bought more assets then when I had the opportunity